This is Brad Berry, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this market and economic update. The stock market is experiencing a broad pullback, with the S&P 500 down over 5% from its recent peak and the NASDAQ in correction territory. In this video, we'll talk about the factors driving this pullback and how investors should view recent events with perspective. Market declines are never pleasant, but understanding how to manage them can help investors to stay on track toward their financial goals. First, the market began to experience a rotation about a month ago when large cap technology stocks declined and areas such as small caps rose. Investors have grown more nervous about the long bull market in technology and AI stocks. The Magnificent Seven stocks, for instance, have gained 162% since the beginning of last year, even with the most recent pullback. More recently, all parts of the market have struggled due to new economic data and concerns around the Fed. Many investors worry that the Fed may have waited too long to cut rates, which we'll explore in a moment. This chart highlights the importance of having a longer time horizon and not just focusing on what's happened over the past few days or weeks. Despite the recent decline, the S&P 500 has still made significant gains over the past few years. This has been the case despite significant events such as the 2022 bear market, the pandemic, and more. Second, investors are concerned about the economy as the Fed keeps rates high. The jobs report for July showed that unemployment ticked up to 4.3%, exceeding expectations while job growth slowed. This comes just days after the Fed's latest meeting, in which they held rates steady but signaled a willingness to cut at their next meeting in September. One reason this has led to concerns is the SAM rule, named after former Fed economist. The SAM rule is a recession indicator that is based on a sudden rise in unemployment. The July unemployment rate triggered the SAM rule, leading to some worry about a hard landing by the Fed. However, it's important to maintain perspective. While unemployment has risen, it is still near historic lows. Even Claudia Sahm herself has stated that her rule is not a hard and fast law, but a statistical regularity. This means that while the Fed needs to watch the labor market carefully, it does not mean that we are necessarily in a recession just yet. Either way, the Fed is widely expected to cut rates at its next meeting and most likely at every successive meeting. This would bring the rate relief that the market is hoping for, albeit not as quickly as many investors would like. Finally, this chart helps to put recent market swings into perspective. We have experienced two 5% or worse pullbacks for the S&P 500 so far this year, which is well within normal levels. In fact, the average year experiences 4 or 5 such pullbacks, and bear market years experience many more. While market declines are never pleasant, it's important to keep a level head. The market is adjusting to a new macroeconomic backdrop, which could take some time to play out. In many ways, the current economic environment is exactly what investors had hoped for just a few months ago. With inflation improving, unemployment still low but rising, and interest rates that could decline soon. History shows that staying invested in an appropriately built and diversified portfolio of stocks, bonds, and alternatives is still the best way to achieve long-term financial goals, even if there are some bumps along the way. At Dynamic Wealth Group, we follow a multidimensional asset allocation approach, building portfolios that target to incorporate many different drivers of return, helping to add layers of diversification, especially during times like now. Our core philosophy is built on preparation over prediction. And while there are signs of both optimism and pessimism, the future is unknown. I hope you found these high-level insights helpful. If you are a financial advisor and would like more information on our multidimensional approach towards asset management, feel free to download our eye-opening white paper titled Busting 7 Risk and Return Myths. Click the link below or visit our website, or email us directly at info@dynamicwg.com. If you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, take care, everyone, and most importantly, make smart, logical, and fact-based financial decisions.